Hello there, and welcome to this analysis of gold chart. Okay, what we can see in the gold chart and what is there to see, right? Okay, first of all, I will start with the 3 monthly chart because they always, most of the time, they will follow a certain pattern. As you can see, from the 3 monthly chart, the market has been bullish ever since the break of 2000, almost 2000 psychological level. So it's good to say that gold is really bullish since there, and we can definitely see bullish momentum build up from here up to here. Although we can see that the market is kinda reacting to this level, which is 4000 psychological level, but unless this candle closes, we cannot say for sure, okay, that the market is gonna react to 4000 and then start to go down. The market definitely needs to go down because it has been really bullish, really overbought, and we need it to somehow make some retracements or some things of that sort. Looking at the monthly chart, let me remove my drawings. Looking at the monthly chart, as you can see, the market had a really had a beautiful wick to the upside that actually closed right below the 4000 level. Can you see that? It's right below there. Oh, right there. Oh, can I zoom in a little bit? Right there. Exactly at 4000. Maybe a little bit above it, but point is taken. Gold has reacted to the 4000 level, especially in the monthly chart. Wow, that's a big deal, right? That's a big deal. Why is that? Because as you can see, the market made such a movement, and we have 13 days until the end of this month, and you can see that the market tried to go up, but then it actually gone down. So I expect the gold to maybe make a bearish movement since it did such a thing last month. So as a reaction to that candle, we need some bearish movement. We didn't have that much of a bearish movement here, so we need that. Okay. Going over the weekly chart, everything must become clearer now. As you can see, the 4000 weekly level, or better to say, PS level, psychological level, is really interesting. Why is that? Market came here as a bearish candle and stopped right above the 4000 level, right above it. And interestingly, the next week opened with a gap. I can see a gap right there, which is this is actually a bullish candle, and exactly closed above the 4000 level. Okay, so that's an indication of a bullish movement, right? So especially as it was a doji candle, so it made more sense for the market to cancel out this candle, this bearish candle with a doji, and we had a reaction. But it's interesting that the market actually wicked to the upside, and now we can expect the market to go lower. Why is that? Because if the market wanted to go higher, it would definitely hold that candle, the weekly candle, I mean, but it didn't do that. Why is that? Because the market stopped without any shadows to the downside, interestingly, goes up and down, making a huge wick that actually covers about, we can say, 50 to 60% of the whole movement of the weekly. Looking at the daily market is a little bit of a interesting, because we have two 4-hour boxes right here, one right here, one right here. I will talk about 4-hour boxes right after this, after I open the 4-hour chart. As you can see, one 4-hour after the actually daily reached this 4-hour level, all right, which is 42.05. All right, the market made a bearish movement, and the market came back to retest that, and it made a bearish engulfing. This is a really famous candle movement, bearish candle movement, as the market would make such a thing, shadow to the upside, bearish candle, and then moves back up, pick up that whatever that's there, and it fills that shadow. All right, so we can assume that the market is bearish right now. But here is an important thing to consider. We have this 4-hour level right here. The market reacted to that. So either we can expect the market to go high and then low, all right, which is really plausible, or we can expect the market to go down, reacting to these levels, and then going up, maybe high, right? So what will it be? For me, the market makes more sense to, you know, go down, go up, sorry, go up, pick up some orders as a reaction to this, rejection right there, and then go down, maybe, all right? Or the vice versa is plausible too. We have to see what the market is doing. We actually play what the market plays. We don't play what we like the market to play. If you understood what did I say? So the hourly chart, the daily chart is bearish right now as a reaction to this, but has a bullish momentum here too. All right, because it reacted to it. Looking at the 4-hour, the 4-hour indicates bullish movement. Why is that? Because let's look at the swings. The market made such a movement. This was actually a consolidation movement. And what did the market do? After that, the market actually, after it consolidated for a while, the market closed above that, creating that, okay? And it actually closed above this 4-hour level, interesting, and then pushed below. Okay, I won't consider this as a higher low because it was really weak. Okay, we can consider this whole movement one big whoop movement. Okay, so this is one movement. The market came back to retest this level, so we can consider this a very beautiful bullish build-up right there. So the market might actually come back down to pick up some orders and then start going higher. Very beautiful. So, long story short, I think about the 4-hour boxes, these are the 4-hour boxes. Places where the market actually stopped and made a reverse move. Stopped and made a reverse move. Stopped and made a reverse move. This was not a beautiful 4-hour because, as you can see, it didn't work well as these ones, right? You can see that these ones work like magic All right, but these are 4 hour. You will see them, and we will talk about them more. So a long story short, looking at the short term, market is bullish. Long term, the big picture, the weekly and the stuff, the market seem to be a little bit weak in the bull move. So I assume that the market needs to pick up orders from below and then go up, or in the weekly and the daily, uh, we can say that the market can make a bearish movement. Now, let's see what else we can have. Now let's enable the EMA. EMA is an exponential moving average, which I use a lot. Exponential moving averages are great. Here you can see that the weekly touched the 8 EMA. I have 8 EMA as my lowest EMA, and I have 14 EMA, which is that orange line right there, as my bigger EMA. Okay, looking at the daily is interesting that the daily actually closed right above that EMA. So it makes more sense for the daily to go higher as a reaction to this, because the market reacted to that, so it came back to pick up order from here, and then with more power goes higher, right? So the market seems to be picking these orders right here and going higher to break that, fortunately, and then go higher. Okay, so that makes sense, right? In a 4 hour, the same thing goes. But looking at the daily actually recently, the EMA, the lower EMA, closed above the higher EMA, which indicates the bullish movement buildup, right? So the market trend has changed a little bit. The 4 hour EMA, the 4 hour EMA seems interesting, but it indicates bearish movement, because as you can see, two things happened here. One thing is that the candle is below the EMAs, so that's a bearish indication. And also, if I actually, maybe let me do something interesting. I don't know if you knew about this. I will hide the candles, and oh my god, look at there. The lower EMA closed below the higher EMA, so that indicates bearish movement. So I'm going to wait. Maybe Mondays are quiet days, so you know that. So we have to wait and see what the market will do. If the market actually came back down to pick up orders and reacted to this, we will go bullish. If not, the market came back up and touched the EMA and reacted to that and rejected, we will have a bearish, we will actually open a sell order until this 4 hour box. This 4 hour box is a huge support for the gold, because as you can see, it consolidated for a while and it didn't actually close above it. So we can assume that this is a good 4 hour box. Okay, I think that wraps it up for this. I know it's a little bit confusing. I cannot say for sure which way the market is gonna go, because we are not gods. Alright, but in short, okay, we can see that the market in the 4 hour, in the daily, we can say it's bullish. In the 4 hour is a little bit bearish from the small picture view. From the big picture view, in the 4 hour chart, we can see bullish swing. In the weekly, I can say it's bearish. So in the monthly, I can say is bearish. As you can see, there is a lot of confusing stuff right going there. Okay, I will talk about it when the market opens, and we will see which way the market can go. Okay, so that's it. Wraps it up. I hope you enjoyed this, and it's up to you which way you wanna open your trade. Okay, but definitely the market is a little bit confusing right there. Have fun.